Did government employees lose billions from their pension overnight? Now, recently, a government employee shared a TikTok video where he lost over 300,000 from his pension statement, virtually overnight. Can you imagine opening a pension statement, seeing over 300,000 being taken away from you in the blink of an eye? But here's the scary part. This is not an isolated incident. Other members had reported even higher losses. And when you add it all up, these reductions can run into billions. And yet, there are still so many unanswered questions. Now, how can you tell if this money was taken away from you? What happened to this money? Why was it taken away? And is the pension fund even allowed to do this? And if it happened at that stage, could it happen again? Now, in this video, I'm going to be unpacking the hidden details behind the sudden loss, and more importantly, giving you the knowledge to protect yourself if it ever happens again. Before we begin, a very quick disclaimer. My name is Dhevan Naicker, and I'm a Resign Specialist at Retirement Wellness SA. We help South African government employees to save thousands in tax, take control of their money, and protect their legacy for their families. Now, we don't work for the government employees pension fund, and the information that we're sharing with you is not provided for or on behalf of the GEPF. So let's get started with the first question, and this is, how can you tell if money was actually taken away from you? Now, it is actually a very, very simple calculation. Basically, we have to keep in mind every 3 years, the pension fund is entitled to make some changes into the benefits, right? So on the pension fund, it works in what is called a defined benefit fund, and in a defined benefit way, meaning all your benefits are defined, right? Your retirement benefits, your resignation benefits, the lump sum gratuity, it's all defined. And how is it defined? It's defined by a set of rules. So behind the scenes, the money is invested, but when you have a look at your statement, what you're seeing is basically the results of certain formulas that are working that are working there. So what actually takes place is every 3 years, the pension fund would run an assessment to determine whether, hey, do we have enough money sitting in this pool to pay out all the members, or are we short on funds? And then they would obviously make a decision as to whether they need to adjust the calculations or not. Now I'm giving you a very, very simple understanding so that we understand the basics, but how do you know, or how can you tell if money was taken away? Well, I'm going to now share with you a little secret. Please make sure that you have a pen and a page to jot it down so that you understand how to calculate it. And then you also share this amongst your colleagues, right, to see exactly what was taken away from each of them. Now remember, each member's value, the reduction would differ because your years of service might be different to your colleagues. Your salary might be different to your colleague. You see, all these elements will play a role in terms of what the reductions were. So the most recent formula change, came in on the 1st of October 2025. 1st of October 2025. So what it means is, prior to the 1st of October, let's say the 30th of November, the formula was in its normal way, let's call it, right? So your value would be high. And what you're looking to see is, hey, in October, call it 31st of October, if you draw a statement, is the value low? Right? So here's what you're going to do, 3 easy steps. First thing is you're going to reach out to the pension fund. Now you have to go into the pension fund, either physically or send them an email or call them with the query, right? Don't look on your app, because you're not going to be able to get this information from the app. So reach out to the pension fund and check with them, hey, can I have a benefit statement for, now I want to do this, remember, 1 month before the change actually took place. So you're going to ask for the benefit statement for the 30th of September 2025. Please jot that down. The benefit statement for the 30th of September 2025. First thing you're going to do, right? Second thing, and whilst you're still there at the pension fund office or on the call or sending an email, second thing you're going to request is, hey, can I have a benefit statement for the 31st of October? So the second thing you're going to request is a benefit statement for the 31st of October. Why are we doing this? Now, this is the third thing we're going to do, right? Is you're going to have a look at your resignation value. So you take your resignation value for the end of September, you see what the amount is, and you minus what is there on the 31st of October. So your September resignation value minus your October resignation value, that's the amount that has been taken away from you, right? It's easy to calculate it if you follow the example that I've given you, which then leads to another question that members ask me, hey Dhevan, why is this only impacting resignation values? Why does this not impact the retirement values? Now, hidden in the fine print, you would see that your retirement benefits are already forward projected, right? So when you see your retirement benefit statement, you'll see, and if you read the fine print, it actually tells you there, hey, look, let's assume you're 56. It's saying, hey, look, your retirement benefits are projected to 60, meaning you might be not yet 60 now. Let's say you're 56, right? It's projected. So the lump sum gratuity is already projected to 4 years down the line. The monthly income is projected to 4 years down the line, which is the reason why, if you read your statement carefully with the fine print, it says, if you are going to leave prior to the normal retirement age, that means prior to 60, prior to 65, then your benefits will be reduced, right? So already there's sort of like a hidden penalty that's applying if a member retires, if you happen to retire prior to the normal retirement age. So keep in mind, if you're not yet 60, the value is projected to 60. When you come to 60 or like 61 and you're not yet 65, it's projected to 65, right? If you're an SAPS member, then of course you have to leave by 60. So the 65 won't apply. But if you're Department of Education, Department of Health, other sectors where retirement age goes up to 65, keep in mind the moment you pass 60, the values again become projected. So the second query I have is, hey, why is this happening? Like, what happened to the money? So the money is all sitting in the fund. It was always in the fund, right? It never really moved. Behind the scenes, remember, the fund is investing. They are investing in the stock market. They are investing in various sectors. And of course, if you head over onto the website, they give you a breakdown of how money is being invested. There are a lot of allegations of fraud. There's a lot of allegations around corruption, which in this video, we're not going to get into that, right? The goal is to focus on you. How do you protect yourself, right? Then members want to query with me. It's the third question they ask is, hey, why was this money actually taken away? So we've got to understand the nature of the fund, right? There's a big pool of money sitting over 2 trillion rand. And in essence, I'm making this simple. The pension fund's trying to assess, hey, do we have enough money to pay everyone? If everybody had to leave, if everyone had to leave from this fund, do we have enough money in our kitty to meet all our obligations, right? Is there enough money to pay for members who have retired? Is there enough money to pay for members who have resigned? If they do not have enough funds, then that's why they would make an adjustment to the formula. Keeping in mind the rules of the fund determine that the change can happen every 3 years. So normally, if you have a look at your benefit statement, you should see resignation value increasing all the time. I'm not talking about your retirement value because remember, retirement value is already projected to 60, right? It's already calculated in advance. But your resignation value is calculated as at the month that you are drawing the statement. So if you get a resignation benefit today and you get a resignation benefit statement, say a month down the line, and you compare your values, you will see that your value increases. Every single month it's going to increase. And the reason is simple, because the formula takes into account your years of service. So the longer your years of service, the higher your value is going to be, right? So why was it taken away? Remember now to keep in mind that the pension fund's got to make sure it can meet all of its obligations. And again, if there are issues in terms of the investing, if it's not going according to plan, then naturally they would reduce it, right? So is the pension fund even allowed to do this? Yes. Part of the terms and conditions, again, of your employment, if you have a look at it, is basically you are aware that the pension fund can adjust the formula. Is it legal to do this? Yes. There was a few years ago where there was some issues. It had been taken up into High Court. And the ruling was that the pension fund merely needs to inform certain providers, right? Meaning they would have to educate unions. Now, the pension fund would place a notice on the site. If you go onto the site, it does talk about them adjusting the formula. It does make mention about them doing this and having that ability. However, it is not clear as to the impact for you. It's not clear on how much of money would be taken away. This is why the first point that I gave you today is, how do you determine exactly how much was taken away? And I gave you the exercise of drawing the statement, right? That's where it becomes real. On the pension fund side, they cannot openly, let's just think about it, right? They cannot openly say, hey, look, we are adjusting the formula. We're going to be taking away billions from government employees. It's going to create a lot of scare. It's going to create a lot of hype. Members are then going to want to pull their money out. It's going to be absolute havoc in that case, right? And then that could cripple our country because then you have thousands of government employees wanting to leave. It's obviously not a suitable thing to do. So how do you protect yourself, right? Fifth point that I want to share with you is understand that every 3 years, the pension fund is going to go through a process where they are going to adjust the formula. So it means you've got a 3-year window period, basically from now. Say the formula change happened on the 1st of October, let's say that's now, you've got 3 years time, right? Now it could happen a month earlier, it could happen a month later, we don't know, right? But you've got approximately 3 years. And in that window period, if you are planning your exit, whether it's through retirement or resignation, you want to make sure that you take this important factor into account, right? Now, why is this the case? Because on the 2nd of October, I had a member who reached out to me, a government employee, an SAPS member. Hey, Dhevan, please, I need some assistance from you. I've made up my mind. I want to resign. I want to go at the end of this month. And I said to him, hey, it's fine that you want to go, but are you aware about the formula change? And then he said to me, look, what formula change? And well, the pension fund put a notice on the website. I have created some YouTube videos to educate members. Please take a look at this video. And then he responded to me saying, like, he's shocked. He's shocked. He did the calculation. There was a huge amount, right? Almost $1 million was taken away from him, virtually again overnight. So a massive amount of money, and naturally it changes the way somebody thinks, right? Because you're not expecting that. You're expecting to receive a certain value. So you can protect yourself by making sure that you head onto the pension fund website, having a look at the news, what's latest that's coming out, keeping in mind that the formula change happens every 3 years, and just getting good advice. So on our channel, we make sure that we provide the videos, to the best of our ability. So you can share this amongst members, stay inside of community chats, get a feel for what's happening so that when the next change happens, you are aware. On our end, what we've done to protect clients, those that we were working with, when it came up that the formula change was happening, we just adjusted the date. So if somebody was leaving, let's say in December 2025, we just said to them, hey, listen, looks like the pension fund's going to be changing a formula. Last time they did this was in 2022. Please go and have a look at what took place. Here's what you need to do. They then got their statements to see how much of money they had lost. They reached out to us and said, hey, listen, I don't want this to happen to me. It could be even worse than what was there before, in which case we just adjusted the date, right? So instead of them leaving, say, in December, we adjusted it to them leaving at the end of October. So, at the end of August. So values then became protected, right? Even at the end of September, values were protected. So as long as the member had left before the 1st of October, the amount was being protected. It's for those members leaving afterwards. Now, if you're watching this video and you've lost a lot of money, please, there's no need to stress. What I want you to keep in mind is the values will continue to increase. Like I shared earlier, every month that you are working, your value will increase. You reach a stage, maybe 18 months down the line, 24 months down the line, that your value is at a break-even level now. It's where it was, like before the formula change took effect, in which case you just shift the date that you are exiting, right? However, if you are turning 60 now or you're turning 65 and you don't have much time, it's critically important then that you start focusing on tax planning, you start focusing on investing, so that you can look to see what are ways in which you can avoid losing any more money, right? Or make back that money through smart tax planning. So again, I hope you found the video helpful. Please, I want to encourage you, I believe very strongly in terms of the government employee market and the importance of making sure that government employees form some type of community to help protect themselves. So on that note, I want to encourage you, share the video amongst your friends and colleagues. Let's help to educate them. The more members who are educated, the better decisions we can make as a community. Remember, if you've not already done so, hit the thumbs up button because that helps me to know I'm creating content that's good, and click the subscribe button so I know, again, you're enjoying what's happening. And I'll catch you in the next video.